Most people, they manage all their properties with little more than an Excel spreadsheet that they update manually. And most of them, they have no clue if they've made or lost money except one time a year when they get the returns from their accountant. It's crazy. So we're like, hey, what if we just made something that people can see performance in real time? We can automate a lot of, what's being done.
Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you love entrepreneurship and investing in real estate, then you are in the right place. Josh is the CEO of Freeland Ventures Real Estate Private Equity and has personally invested in well over 500 properties all across the country. He's also made hundreds of private lender loans and owns over 1,000 units of apartments. Josh is an expert at raising private money for deals, and he prides himself on never having had a boss in his entire adult life. Josh and his team also mentor investors and entrepreneurs from all over the world. He doesn't dream about doing deals. He actually does them, and so do his listeners and students. Now sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So hey, welcome back to Accelerated Investor. I am so excited to be with you, whether you are on your way to the gym, whether you're working out, going for a walk, whether you're in your real estate office, thinking about investing in real estate, or you're just hanging out at your house, wherever it is. I'm so honored and excited to be sharing with you, to be on this journey with you. So excited to have you part of the community, part of the tribe, part of the squad. Thank you for being a follower of Strategic Real Estate Coach and Accelerated Investor. Don't forget to join our private Facebook group for all of our Accelerated Investor members. If you go to Facebook, check out Accelerated Investor, log in and join. We have hundreds and hundreds and hundreds of members. We just started the group and we're growing every week by hundreds of members, and we're looking forward to sharing there with you about your entrepreneurial and real estate journey. Today, I'm with a special guest. His name is Heath Silverman. He's the co-founder and CEO of a real estate app and a software program called Stessa, which we're going to talk more about in a minute. And we're going to talk a little bit with Heath about his journey as a real estate entrepreneur, as a software developer. We'll talk specifically about his software, Stessa.com, and how that can help you manage your rental portfolio. And I'm really excited to be sharing the next few minutes with Heath. So Heath, listen, relatively new relationship. So I'm excited not only to be doing this interview for our tribe, but also for me personally. I love to use this podcast as a way to meet new entrepreneurs and make new connections for myself. So welcome to Accelerated Investor. How you doing?
Thanks, Josh. Yeah, excited to be here. Great to be on the show.
Fantastic. So Heath, you own a bunch of multifamily properties, single-family rentals. You've been investing for a long time. You've been in software for 20 years, real estate entrepreneurship and real estate investing for about the same amount of time, based in San Francisco. So let's just kind of start with what I'd love to hear about from investors is, number one, is about their latest real estate investment. Is it multifamily? Is it a single family? Just tell us a little bit about one of your recent investments that you've made.
Yeah, so latest investment. Since 2001, I've been a real estate investor, and I started, with a single family residence. My first property back then was a house that I actually bought to live in. But when I got in there, I realized there was quite a bit of work to be done, and I brought on a couple roommates to help subsidize, the rent and the ongoing expense of making all of those improvements. I basically was house hacking the building, and I quickly found out that I got addicted to the whole, supplemental income, plus in the Bay Area, the potential for appreciation. So since then, been investing in real estate, and I actually took a number of years off when the market got crazy, but starting in 2009, I started doing a deal or two every single year. And now I'm on a pretty good cadence of 1 to 3 deals per year. This year, I'm actually looking to do 3 deals, 2 of which are 1031 exchanges. One of them was a duplex that we bought a year ago, did a quick value add, turned it over, and took the money, 1031 exchanged it into a 19-unit building over in Rogers Park in Chicago. And the other one, we're actually in the process right now of selling a 6-unit building over in Berkeley that we've owned for a couple of years, did a number of value add improvements to it. And I can talk a bit more later about the type of buildings we go for, like the sort of value add improvements that we do. And we just got in contract into our 1031 up leg. So this is going to be a new multifamily building in San Francisco that we're purchasing.
Fantastic. Love it. And your journey kind of is two separate trains to going down similar tracks. So you have your real estate investments, which we started to kind of unpack, and then your journey as a software developer and a founder and CEO of Stessa. So tell us real quick, about what is Stessa as far as helping people really understand their numbers, understand their portfolio. Fantastic tool. And but tell us, why did you found it? Where did it come from? Where did you get the idea, and what does it do for your clients?
Yeah, it's a great story. I mentioned I started way back when with that single family property, and I started doing quite a bit more investing around 2009, post financial crisis in the Bay Area. At least there were so many opportunities. It was incredible. Single family homes over in the far East Bay that had sold for over $400K in 2006 were all of a sudden available for just over $100,000.
Wow.
75% haircut. Wow. In 2009. It was a little bit of a scary time to buy with all the foreclosures and everything going on. But these were properties that you could purchase right away. People needed a place to live, get immediate rents, cash flow. I pretty much in the early days, I followed the 1% rule. So I wanted 1%, the rent to be 1% each month, to be 1% of the purchase price, but plus all the improvements that we had made. And then over the years, I kind of started getting into bigger buildings. I realized single family rentals were a bit harder to manage, so I got more into multifamily. So all along this time, this was all a part-time job. I was spending weekends, evenings doing all this real estate investment, all while working my day job in technology. So I've been working in tech for, as you mentioned, just around 20 years, been at a number of big companies, small, worked at Intel, had a number of startups, actually founded 3 startups myself with my the same co-founder every single time, who also, as it turns out, is one of my main partners for real estate investing. And in 2016, the two of us were like, we're both doing all these tech startups, we're investing in real estate, like we really should do something together again, really where our passions meet. So, we want to do something, the intersection of real estate and technology. So we took some time off, we were whiteboarding all these big ideas. And of course, now that we actually had some time, we got totally distracted by our real estate portfolio and doing these sort of micro optimizations. And it turns out we looked at one building in particular. It was an 8-unit multifamily property in Oakland. This is a building that, because we had day jobs, it had been on autopilot for a number of years. And over, a few weeks of analysis, it was crazy. Just a few weeks, we literally doubled the value of the building.
Wow.
Yeah, it was mind blowing. So it was a combination of operational improvements, and also we found some interesting ways in the rent controlled area to increase the rents that didn't impact the tenants in any meaningful way. If you want to get into some more specifics, so it's things like, swapping out the property manager to get, that price down, because now we were at a bigger scale. We were able to negotiate better on rates. We, swapped out some of our, regular providers like landscaping, gardener, all that. We found a water leak, which reduced the water bill significantly. And then finally, because Oakland is rent controlled for older buildings, we realized that a number of the units in the building were subsidized. And we bought it with these units that were subsidized, but we hadn't really dove deep into them. And we realized that we could just contact the agencies and get them up to HUD fair market rent for the area overnight without the tenant having to pay $1 more. So if you're looking at that, and if you know about multifamily is all based on the NOI for the building. That's, the NOI basically equates to what the building is going to be worth.
Right.
Living alone. And in Oakland at the time, competitive areas, and this was a nice part of Oakland, around Ivy Hill, similar to San Francisco, cap rates were at around 4%. So every $333 a month that you can add to the NOI equates to, about $100,000 in value. And over the course of this 2 weeks, we were able to basically add about $3,000 a month in NOI so $36,000 a year.
Wow.
Just from this combination of improvements in OpEx and getting the rents up a bit. So
you added $1 million value to
$1 million in value in a couple weeks of work. Like, holy moly, like three things. One, why have we not done this before, and why are we not doing this with our other properties? Two, most of the stuff we did can be totally automated with technology. So as product people, and I'm more on the business side, my founder is our CTO and engineer on Lee's engineering team. But we were like, yeah, we can build something that can do a lot of this for people automatically.
Nice.
And three, I started asking around to other investors and realized, hey, there's a huge market for this. It's crazy. I spoke to a couple hundred investors, and speaking to all these guys, I found out that most people, they manage all their properties with little more than an Excel spreadsheet that they update manually. And most of them, they have no clue if they've made or lost money except one time a year when they get the returns from their accountant. It's crazy. So we're like, hey, what if we just made something that people can see performance in real time? We can automate a lot of, what's being done. And even bigger, we were thinking, you look at real estate. Real estate is the biggest asset class in the US, like $40 trillion, right? It's the biggest lending category in the US. And since the financial crisis, homeownership rate's been hovering around 50-year lows while the number of renters has reached all-time highs. We dug a little deeper and saw that, many Americans today are viewing real estate as one of the best long-term investment vehicles. And as it turns out, when you look at rental properties, about 70% of rental properties, and these are, single-family homes that are rented and multifamily buildings, they're actually owned by individual investors. So people like you and me, mom and pops, and they just don't have, tools just don't exist. And if you compare real estate to more traditional asset classes like equities, right? With your equities, you expect to have, real-time benchmarking tools, analysis. You have access to robo-advisors these days. And we're like, wow, we really need to build something like this for real estate.
Right. My newest and most powerful real estate investing book, The Flip System, is now available. And for a limited time, you can grab your free copy at getflipsystem.com/podcast. Using the same proven principles, secrets, and investing strategies I'm sharing in this book, I've been able to personally close over 750 highly profitable real estate deals over the last 15 years, make over 400 private lender loans, raise over $30 million of private money, and acquire over 2,000 units of apartments. Get my newest book now for free for a limited time at getflipsystem.com/podcast. That's getflipsystem.com/podcast. And so you did. So you built Stessa, and you're operating now, helping primarily residential, single family, and small multifamily investors really understand their portfolios. So tell me some stories about whether it's you or clients who have other sort of epiphanies once they move from Google Docs and Excel spreadsheets to Stessa, and they really understand the information, right? Because as a CEO or as a business owner and entrepreneur, you're really only as good and can only make decisions based off the information that you're provided. So what you're really giving investors is the opportunity to have better information and to slice and dice that information in a better way so that they can make quicker, faster decisions about their current portfolio and future investments. So is there one thing within the software that has kind of stuck out? Is there one thing that's helped with you, or maybe an event other than the event you described, that helped other clients be like, wow, I can't believe I've been operating off of spreadsheets in the past, or this is the way Stessa's helped me analyze my portfolio and I've made more moves to invest in a different area or a different asset class because of the software?
Yeah, I mean, first I got to say you hit it right in the nose when you talk about tracking and measuring performance. I was just at a conference the other week, FinCon, which is all about financial freedom and a lot of influencers in that space. And we were talking to a number of these people about their investments in real estate. And it's always great when you're out there and you're at conferences and all these people are, first you have all the people who haven't heard about the product before and you have to kind of explain it to them. And that's always a fun challenge depending on what their needs are. But then we had tons of people who were coming up to us and saying, hey, I already use Stessa. And one of the quotes, one of the guys who came up to me that really stood out, and it's pretty much what you said. He's like, yeah, the thing about Stessa is what's tracked gets measured, and what gets measured gets optimized. And when I optimize, my performance goes through the roof. So I think that really sums it up. And that's, I think, pretty much what you were just saying right there.
You bet.
Yeah. So what Stessa is at the end of the day is it's a bookkeeper, it's a smart filing cabinet, and it's a personal assistant all in one, and all for free for real estate investors.
Oh, it's all free. Okay.
It's all free. Yeah.
So how does that work? How does your business perform with just a completely free app? Do you have some sort of upsell or upgrade, or tell me, like, obviously now everyone's going to be like, wow, how do I get that for free? So how does your model work?
Everything we have today, all the core features, and I'll get into that, it's all totally free. And what we're planning to do is actually in this next few weeks, in the coming months, we're going to be adding a number of value-add services on top of Stessa that have real value to help people with more of the operation side of the business. Stessa as a whole, I look at kind of two things you can do with software these days. You can do sort of the operation side, which is getting access to leases, getting them signed, collecting rent, doing all of that. And then there's more like the asset management level of real estate. And what we are with Stessa, Stessa is assets spelled backwards. So we were thinking more about this asset management, replacing the spreadsheet, replacing the spreadsheets, doing all that work. So that part's always going to be free. And I can't quite announce it yet, but we have some exciting value add premium services that we're going to be launching at the end of the year.
Fantastic.
But everything that's free is and will always be free.
So it's Stessa.com, right? Go to Stessa.com to get a free account.
Go to Stessa.com. Set up an account, super easy. Yeah, so basically what happens, you go to Stessa.com, you enter the property address that you own. We try to make everything sort of as magic as possible. We pull in public records data, we pull in things like all the property details, square footage, photos if it's out there. We pull in your loan amount if it's public data. We pull in all your assessments. We basically sort of pre-fill in this whole dashboard for you. And we keep it up to date with all the most relevant information, all the public records that are out there. All you have to do is just add your rent roll, and then you link bank accounts. So you can link everything from your credit card, your whatever bank accounts you have associated with your property, if you have certain property managers, we support them. I personally, most of my property managers, they use Appfolio. So I link my Appfolio account, and we automatically pull in all those PDFs, parse through them, put it directly into the transactions ledger, and then generate a beautiful KPI dashboard where you can go in there and you can see in real time how your properties are performing. We have a nice net cash flow report that basically shows in real time every month, are you making money? Are you losing money? Right. And we do all this by having direct access to all that information and bringing it all together and helping it to be visualized.
Right.
And I don't know about you, but me in the past, I used to spend, I would say, a couple hours every week. I guess it depends on the size of your portfolio. In the early days, it was hours every single month. And then it became every single week, and then it became a couple hours every single day. But going through all the bills I'm getting that shoebox of receipts and basically entering all that detail, reconciling it with all the transactions that are showing up in my bank account, trying to get all the information and seeing how is performance,
right.
what is happening with the properties that I own. And now it's incredibly simple. So we have an app on the phone. You go to Home Depot, you just snap a photo of the receipt. We automatically pull the receipt in. We have OCR, so we read all the data from the receipt, extract all the important data, create a ledger entry. We use machine learning to auto-categorize it. So, hey, this is Home Depot. This is most likely supplies. You associate it with the property, and boom, it's in there. And whenever the credit card or bank account hits, we then merge the two. And wow, everything's all there in real time.
Wow, that is fantastic. So yeah, love it. So I'm interested to know, building Stessa, building software. So I built a software company called RealFlow, and we kind of funded the development of RealFlow from our real estate profits. So I'm interested to hear a little bit more about your journey of your entrepreneurial journey, right? The good, the bad, and the ugly about whether it's investing in real estate or building Stessa. What are some of the things, maybe the best 2 or 3 or 4 decisions that you've made, whether it's people, whether it's partnerships, whether it's financially, what are some of the best decisions that you've made to build these businesses, your real estate portfolio and your software company? And then conversely, what are some things that you did or made decisions on that you learned from that were maybe not the best decision, that you think back and say, going forward, I've learned my lesson here. What are some things that you would do differently? What are your thoughts on that?
Yeah, so in the first, in terms of best decisions I've ever made, I got to say, both in the real estate business and in the business of starting companies, it's all about the people. And I'm incredibly lucky, I would say, to have an amazing co-founder. So my co-founder, Jonah Schwartz, we met in undergrad when we were both at UC Berkeley. We were working together, kind of geeky. We were both resident computer consultants in the dorms, met there, really bonded, and realized we both had this passion for entrepreneurship, passion for investing. We actually started our first company back in 1999 while we were still in college together. We built the largest community online for comic strip creators and their fans. And we sold that back in 2000, just before the market crash. It was quite the journey, building a company when, your first time building a company and then having an exit right away. And then over the years, we started investing in real estate together, and we've been investing in real estate now for over 10 years. And now with Stessa, again, I didn't mention this also, but we started the company back in 2016, and then early 2018, just over a year after starting the company, we've already been acquired. So we actually founded the company and funded the company, and all of our employees and everybody ourselves for the first year started going out to raise money, and some path led in the right direction. We found a company that had the same vision as we did. And have you heard of Jones Lang LaSalle? Massive global Fortune 500 real estate and investment services company.
Sure, absolutely.
Yeah. So they acquired us. We definitely had a very clear alignment and vision. And we continue very much today. Having a partner like Jonah, somebody who I can trust, who definitely does all the things that I'm not good at, and I do all the things I would say that he doesn't enjoy doing. We really balance ourselves out incredibly well.
That's great. So I'd like to hear more about that. So I've found, and I've had three big partnerships in my real estate investing journey, and almost every time we had different skill sets, and that's why it worked. Yeah. And we got to a certain point in each one of those relationships where it made more sense to sort of divide and conquer. And in my first businesses, I built them with my original partner, Greg. We had a lot of the same skill sets. We built two businesses really, really quickly. We decided to basically buy each other out. He took one, I took the other. It made sense. But what I've found is in each partnership, the ones that have worked really well, you have two guys that have a lot of mutual respect for each other's skill sets, and or two girls or whatever it is, and you find that one is typically good in maybe the front of the house, whether it's marketing, sales, digital marketing, vision, strategy, and then you have another guy who's more better at the back of the house, whether it's software engineering, bookkeeping, operational systems. So tell me about you and Jonah. Are you guys built in a similar way? And
Totally.
Okay, so let's hear more about that. Go ahead.
Yeah, I'm all about front of the house, the business side of things, the marketing. I went to business school. He's more about back of the house, making sure everything's operating smoothly. He's always the guy who, when we were doing our financials and bookkeeping, he was doing a lot of that. He's really responsible for building the product, keeping on track, putting together a roadmap, handling all that. Obviously, now as we've grown to be a bigger company, we have a whole engineering team here in San Francisco, and then another bigger engineering team over in Eastern Europe. We have a head of product and head of marketing and all these other people who are helping out. But in the early days, if you were just to break things out, I was definitely front of the house. He was definitely back of the house, and that worked incredibly well. And I think we just sort of understand each other. It was always great, I would say, when we were in investor meetings. We complemented each other incredibly well. He's also pretty amazing, I would say. One of the things, even though he's more back of the house, he's great at things like recruiting. He's almost like a Pied Piper of engineers. In Silicon Valley, finding great engineers is a sort of a prerequisite to be able to build a technology company. And he's one of those guys who anybody who's ever worked with him wants to work with him again. Working with somebody like that, trusting them, knowing that I can go and disappear for a week and just be spouting random stuff about where we're going, and then things are back home are moving smoothly forward, and I come back and there's just more great stuff done. It's great. And as it turns out, I too, like, I guess all my properties, so outside of business, all my properties, I have 3 different partnerships. I have, this partnership I have with Jonah, which is where most of my properties are. I have a partnership with my family. So I've done some investing with my wife. I've done some investing with my parents. Then I have a partnership with another real estate investor. And it's funny, depending on, with Stessa and with Jonah, I'm sort of front of the house, he's back of the house, like different partnerships, different relationships. You kind of figure out where other people's strengths are, and you kind of, mesh in different ways. It's always interesting to see how that plays out.
Yeah,
all these work great for me, and I've been incredibly lucky that I have never had a bad experience with a partner.
Got it. Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com/podcast. That's joshcantwellcoaching.com/podcast. So just a couple final questions, and these are kind of quick hitters. So tell us about how much. One of the questions I love to ask is, what real estate deal have you done that made you the absolute most amount of money?
So I can talk about that, but before that, I was still thinking about your last question, and I want to tell you a crazy story about the worst thing that ever happened to me and one of the biggest lessons I've ever learned. And then I'll tell you about the best real estate deal I've ever done. So
perfect. Let's hear it.
In terms of the worst, so when I had that first single family house, and this is a totally crazy story. I had that first single family home. I needed to do some construction on it. I was kind of new to all this construction stuff. And I had to replace the garage, water leak, all this damage. I found this one contractor who came in too good to be true, gave me a great estimate, great bid, great, everything looked wonderful, asked for a lot of money up front. I put it all down, did it, and he started the work, demoed the garage, and then completely disappeared. Wasn't there for months. And then here's where the story gets totally crazy. I was trying to call him, his phone line went dead, I couldn't figure out, it was insane. I later saw him on the news. He was arrested under suspicion of being the 580 sniper. There was this guy shooting people. I don't think it was him. I think that he had some, maybe some sketchy people living with him that led to the police honing in on him, and he happened to drive a white pickup truck. But yeah, he was arrested. He got put in jail, and that's why I couldn't finish the work. And I learned after that, don't take the first bid you get. Always do your due diligence. Always check references. That is definitely my most crazy real estate investment story.
Thank you for sharing that. Love it.
Yeah. And then in terms of my best investment, back in 2012, I believe, there was this one property that I bought in San Francisco where we tripled the value of the building in a year and a half. That was just completely insane. And the way we did it, and this sounds strange, we did it what I guess you could call is with insider information. I love real estate because insider information is always readily available. It's not only insider information, it's more that it's information asymmetry. This was a building that I had seen before the financial crisis had hit. The past owner had bought it for $1.7 million. He put it on the market, probably on the peak of the market, was trying to sell it. And I happened to look at it randomly, even though I wasn't interested because the numbers just didn't work out. But I saved all of the documentation, all the disclosures that he had put out there. So I had all the full rent roll, I had all the tenant information, all the leases. And then lo and behold, the crisis hits, the building ends up going into foreclosure. The bank comes out, the owner just disappeared. The bank comes out, asks the tenants, hey, how much are each of your rents? So you got to do estoppels. In San Francisco with rent control, it's a bit tricky. And I think the tenants just lied and said, hey, our rents are a fraction of what they were actually paying. The bank had no information to back it up. So this thing hits the market. I see the building. It's $800,000, less than half of what this guy had bought it for and was trying to sell it, just a couple years before. And I look at the rent roll. I look at the tenants. It's all the same people. So I went to the listing broker, and I'm like, hey, agent. I was like, hey, I have leases that say that these guys are, their rents are like 5 times what they're supposed to be paying, or what they're paying right now. They're supposed to be paying 5 times what they're paying right now. And he's like, yeah, good luck with that. Impossible. So anyways, we bought the building. Nobody else was interested. Got a lawyer and showed it was the same people who were living there. I mean, standard stuff. We were doing, we had the leases, got the rents up, and then we got, I would say, pretty lucky in that a number of the people, one of the units decided they wanted to leave, and then all of a sudden the whole building left, and the next thing you know, the whole building's vacant, and boom, we were able to sell it for more than three times actually, the purchase price a year and a half later, because we had this great vacant building in San Francisco in a nice area people next owner could lease it up at market rents. It was quite unbelievable. And one of the things in Stessa that we do, I mentioned earlier, I talked a little bit about the income and expense tracking, which is basically the automated bookkeeper. But one of the other big things we do is we have this smart filing cabinet. And I don't know, if you're like me, you're probably overwhelmed with paperwork all of the time. In my office upstairs, I just have a desk stacked with papers, sky high, getting letters from the city. You have old leases, you have various notices you got to deal with. You have all the disclosure package you got from analyzing this property or that property. And the reality is, looking back at that deal, having that information, keeping it organized is essential to making you a good investor. And you never know when that information is going to be useful and help you get funded or help you do a great deal like the one that we did. So as an investor, all you have to do is you can upload all your documents to Stessa. You can also, whenever you get that latest invoice from a contractor or you have a contract, you can forward it to documents@stessa.com. We automatically read it, categorize it, keep it all there, keep it handy, unlimited storage. You have all the information right at your fingertips. So you can pull it, access it right when you need it. And it makes being an investor and continuing to optimize, continuing to stay on top of what you need to stay on top of incredibly easy.
Love it. And on a final note, there's software is only as good as how much you use it and adopt it. So for those people who are building rental portfolios and operating on spreadsheets and shoeboxes and Google Docs, start adopting software like Stessa now, because it's just so much easier to use when you have 2 units or 6 units or 30 units. When you have 2,200 units like we do, it becomes almost impossible to, not impossible, but it becomes very difficult to get away from your systems when you have a huge portfolio and then start something new. And I would rather encourage all of my listeners and my tribe to start right now with whatever size portfolio you have, adopting Stessa, adopting software, using it now, and get away from your shoeboxes and your Google Docs and your yellow pads. Get away from that stuff now, because many of you are going to feel the pain, the challenge, the ceiling of you can't grow anymore because you're operating off of those outdated, archaic ways. And if you do it now, you'll find it becomes much more easy to grow and scale, right? So Heath, listen, awesome time today, awesome interview. I guess the last question I wanted to ask you was about that. When you look at scale, you've been involved in lots of different technology companies. You've been involved in lots of different startups and Silicon Valley type of things. For those people that are not adopting your software, that's probably your biggest competition, is maybe not other softwares, but people who just don't use software at all. So just comment. Just comment on that. Just getting people, how easy is it to pivot from this old archaic way, getting started with Stessa, so it makes their job and their scalability so much easier going forward?
Yeah, it is incredibly easy to get started with Stessa. As I mentioned, you can get set up in just a couple minutes, enter all your property, enter your address. We pull most of the information from public records. Everything's in there. You get an immediate executive dashboard. You can start seeing performance once you start pulling in some of your financial data. Super simple to get started. And you're right. I mean, getting to scale it's an interesting question. Right now we already are getting to a pretty good scale. Right now we have tens of thousands of investors. I think we just broke 50,000 users the other week. And these users are tracking well over $25 billion in assets across the platform. So lots of users, lots of scale getting there, but finding these people is not necessarily the easiest. These are investors, a lot of them, they're people like me, they're part-time investors. They, might have smaller portfolios. Many of them have day jobs, right? So they're not like part of necessarily, like they aren't listening to people like you. A lot of these people just go about their day-to-day business. Some of them may be accidental landlords, and they're not broadcasting that they are landlords. They're not, posting they're not on LinkedIn, in their bio saying, I'm also a landlord. This is something they do part-time. So we've been doing a lot of things to get out there and get the word out. Things like, podcasts, going to conferences where these people are meeting up. And some paid advertising on Facebook and other social platforms. But the reality is, what we're finding is the best way that we're getting the word out is investors are telling other investors. So it's all about that kind of organic, spread. Once somebody uses the product and they see just how much time and how much money they can save by using Stessa, they go and they tell all their friends. Nice. That's the best type of marketing is word of mouth. I love it. Well, listen, Heath, thanks so much for jumping on today. I really enjoyed getting to know you better, getting to know a lot more about Stessa and your entrepreneurial journey. I just want to thank you for taking the time out to be with our investors. There'll be comments in the show notes and links in the show notes. Is there any other place where our audience can engage with you? Facebook page, Instagram, any other places that they can reach out and connect with you? Yeah, so Stessa, we have the website, www.stessa.com. It's really easy to engage directly with me and also with the team. There's a little blue chat box in the bottom right-hand corner, both on the marketing site and also once you're in the product. And we respond pretty quickly if you have questions about Stessa, if you have broader questions about real estate. And then, of course, we do have a Facebook page, Instagram, all the good stuff that any company would have. So you can find us online. Most of those, I think, are Stessa HQ. We're on Twitter. We're tweeting all the time. But definitely check us out. Start at www.stessa.com, set up an account, and all the rest will follow. Fantastic. Well, thanks so much, Keith. I really appreciate you being here. And for all of our listeners, I, again, can't thank you so much for engaging with us, spending time with us. I'm honored. Heath is honored for all of you that have taken time out of your day to spend time. So share this on social media, share this on all your platforms. Leave us a rating and review if you enjoyed it. And we'll definitely look forward to seeing you on the next podcast. Thanks so much.
You've been listening to Josh Cantwell and the Accelerated Investor Podcast. Leave a comment on our iTunes channel and let us know what you want to learn next or who you'd like Josh to interview. While you're there, give us a 5-star rating and make sure to subscribe so you can be the first to hear new episodes. Follow Josh Cantwell and his companies, Strategic Real Estate Coach and Freeland Ventures, on all social media platforms now, and stay up to date on new training and investment opportunities. To start your journey toward the lifestyle you've always dreamed of, apply for coaching at joshcantwellcoaching.com.